Bitcoin, the investment that will leave you speechless. Bitcoin is the most popular and traded cryptocurrency in the world. In a crypto market of close to $2 trillion, Bitcoin accounts for about $750 billion of value as of March 11th. Bitcoin's price is infamous for its fickleness. After humble beginnings in 2009, the coin crossed $1,000 for good in 2017, then followed a steep but bumpy path to an all-time high of roughly $69,000 in November 2021. It then scraped as low as $35,000 in January 2022 before rebounding to its current market price of about $39,000. But this volatility has not held Bitcoin bulls at bay. A Goldman Sachs analyst predicted in January that Bitcoin could go beyond $100,000 if it becomes accepted as a gold alternative. Hey guys, welcome to Billionaire Crypto Investor, where we tell you about Bitcoin, the investment that will leave you speechless. So stay with us till the end of this video so you don't miss out on any of this information. Before we proceed, don't forget to subscribe to our channel and click on the bell icon so that you don't miss out on any of our wonderful videos in the future. And let's get started. Bitcoin is often referred to as a digital currency and as another way to central bank-controlled fiat money. However, the latter is valuable as it is issued by a monetary authority and is widely used in the economy. Bitcoin's network is decentralized, and the cryptocurrency is not used much in retail payments. One can argue that Bitcoin's value is the same as that of precious metals. Both are limited in quantity and have chosen use cases. Precious metals like gold are used in industrial applications, while Bitcoin's underlying technology, the blockchain, has some applications in the financial services industries. Bitcoin's digital providence refers that it might even serve as a medium for retail transactions one day. Currencies have value as they can function as a store of value and a unit of exchange. They also demonstrate 6 key attributes to enable their use in an economy. The definition of value in a currency has changed in centuries from physical attributes to the velocity of its use in an economy. Bitcoin demonstrates some attributes of a currency, but its main source of value lies in its restricted supply and increasing demand. If the price of one Bitcoin were to reach $514,000, Bitcoin's market capitalization would reach approximately 15% of the global currency market. There are 6 key attributes to a useful currency, and those are scarcity, resistance, durability, acceptability, portability, and divisibility to counterfeiting. These qualities allow a currency to find extensive use in the economy. They also limit monetary inflation and make sure that the currencies are secure and safe to use. Currency is useful if it works as a store of value, or to put it differently, if it can reliably maintain its relative worth over time. Throughout history, many societies used commodities or expensive metals as methods of payment because they were considered to have a relatively stable value. Instead of carrying around cumbersome quantities of cocoa beans or other early forms of money, societies at last turned to minted currency as an alternative. The first such currencies used expensive metals like gold, silver, and bronze, which had long lives and little risk of depreciation. Allocating value to currencies is a matter of debate. Their value came from intrinsic physical properties. For example, gold's worth comes from the cost of extraction and certain qualitative factors such as shine and purity content. In the modern age, government-issued currencies often take the form of paper money, which does not have the same intrinsic shortage as precious metals. For a long time, the value of paper money was explained by the amount of gold backing it. Even today, some currencies are representative, which means that each coin or note can be directly exchanged for a particular amount of a commodity. The idea of a currency's value started changing in the 17th century. Prominent Scottish economist John Law wrote that money currency issued by a government or monarch is not the value for which goods are interchanged, but the value by which they are exchanged. In other words, the worth of a currency is a measure of its demand and its ability to stimulate trade and business within and outside an economy. This thinking hacks closely to the modern credit theory for monetary systems. Commercial banks make money and value for currencies by lending to borrowers who use the money to purchase goods and cause the currency to circulate in an economy. After countries deserted the gold standard in an effort to curb concerns about gold supplies, many global currencies are now categorized as fiat. Fiat currency is issued by a government and not backed by any product, but rather by the faith that individuals and governments have that others will accept that currency. Today, most major global currencies are edicts. Many governments and societies have found that fiat currency is the most durable and least permitting to loss of value over time. The value of fiat currencies is a function of their demands and supplies. The US dollar is considered valuable as the world's biggest economy uses it, and it dominates the flow of payments in international trade. Any discussion about the worth of Bitcoin must address the nature of the currency. Gold was useful as currency due to its intrinsic physical attributes, but it was also cumbersome. Paper money was an improvement, but it needs manufacturing and storage and lacks the mobility of digital currencies. The digital evolution of money has moved away from physical attributes and towards more functional points. Here's an example of this. During the financial crisis, Ben Bernanke, who was then the governor of the Federal Reserve, appeared on CBS's 60 Minutes and elaborated on how the agency rescued huge insurance agencies such as American International Group and other financial institutions from bankruptcy by giving money to them. Puzzled, the interviewer asked whether the Fed had manufactured trillions of dollars. That was not quite the case. Bitcoin does not have the backing of government authorities, nor does it have a system of intermediary banks to propagate its use. A decentralized network consisting of independent nodes is responsible for permitting consensus-based transactions in the Bitcoin network. There is no edict authority in the form of a government or other monetary authority to act as a counterparty to risk and to make lenders whole, so to speak, if a transaction goes wrong. The cryptocurrency does display some attributes of an edict currency system, however. It's scarce and cannot be counterfeited. The only way that one would be able to create a counterfeit Bitcoin would be by applying what is known as a double spend. This refers to a situation in which a user spends or transfers the same Bitcoin in two or more separate settings successfully, creating a duplicate record. What makes double spending is the size of the Bitcoin network. A so-called 51% attack in which a group of miners theoretically control more than half of all network power would be important. By controlling a majority of all network power, this group could influence the remainder of the network to falsify records. However, such an attack on Bitcoin would need an overwhelming amount of effort and computing power, thereby rendering the possibility most unlikely. But Bitcoin often fails the utility test as people rarely use it for retail transactions. The main source of worth for Bitcoin is its scarcity. The argument for Bitcoin's value is the same as that of gold, a commodity that shares characteristics with the cryptocurrency. Bitcoin's much more divisible than edict currencies. One Bitcoin can be separated into up to 8 decimal places with component units called satoshis. Most fiat currencies can only be separated into 2 decimal points for everyday use. If Bitcoin's price continues to rise over time, users with a small fraction of a Bitcoin will still be able to make transactions with the cryptocurrency. The development of side channels like the Lightning Network may further boost the value of Bitcoin's economy. Bitcoin's value is a function of this shortage. As the supply diminishes and demand for cryptocurrency is increased, investors are screaming for a slice of the ever-increasing profit pie that results from trading its limited supply. And that's it for today's video, guys. We sincerely hope you enjoyed it. If you did, please click on the like button and make sure you share it with your friends and family. If you have any questions or comments for us, please share them in the comment space below. And don't forget to subscribe to our YouTube channel where you'll see even more of our incredible videos. Don't forget to check out our other videos that have been specially selected for you. We'll catch up with you in the next video. Thanks for watching.